is everybody there? So we're going to start on time because I think time is one of the most precious things we have. So welcome to Financial Literacy for Millennials. This is going to be the most amazing webinar that you have ever attended. And I mean that seriously. So what is literacy and why are we talking about it now? Let's get back to all the millennials who graduated from university and now are in their first jobs, getting along, doing what they're supposed to do. So you had how many years of university education preparing you to be in the workforce? And what were you taught all that time? You were taught skills, you were taught about information of how you should market yourself, how you can be of value to an organization, a company, or even if you were to join your own company, how were you going to add value to that company? And so you are focused and you are conditioned to do exactly that, to add value to someone else and to something else. And my point is, when I talk about financial literacy, I'm talking about you. I'm talking about each of the millennials who is out there working, doing all they're supposed to do for someone else, earning money, making big profits for someone else. And I'm saying to you, you need to find out how you can make more money for you. So that's what this program is all about. It's about financial literacy, understanding why it's important, understanding what needs to be done, and how you should go about it. And to help me with that, I have an amazing group of millennials who are going to be sharing their mantras, sharing their experiences, and sharing a lot more that is going to add a lot of value, not only to your life, but to all of us on the panel as well. So without further ado, I would like Saloni Jain, our first panelist, to please introduce herself. Saloni, all yours.
Thank you so much, Miss Sandy, for giving me this opportunity. I would also like to thank my Quotient and our attendees for sharing your valuable time with us. So 12 years into the corporate world and 32 years onto this planet, and I still find this as the most difficult question of introducing myself. I'm sure all of us will agree to it. So my name is Saloni and I am Director Corporate Communications and Marketing for My Quotient. I am passionate about social and diverse initiatives. My job is to produce large-scale conferences which help develop and enhance diverse professionals. I spear My Quotient conferences by preparing and facilitating designing leadership forums which business executives attend and discuss as leaders which obstacles they're facing and how they are overcoming it, especially females. So I am very passionate, very enthusiastic about life. Talking about me as a person, I am a little introvert or a soft-spoken person by nature. However, I am a warrior by heart, and I believe in taking the right path no matter how hard it is, seizing the opportunity, predicting the opportunity, and just go ahead and do it and give the best version of yourself. I am also like all of you, all my attendees. I love painting. I love listening to music. I love dancing. I also get scared sometimes and I get overpowered by the mean voices in our head. But I believe in taking it all in my stride and giving the best version of myself. In the next 90 minutes, we will be discussing more about how I balance my professional and my personal life. And I hope I'll be able to share great insights in today's session. Thank you.
I'm sure you will, my dear. And now we move on to our next panelist, Devrat Rawal. Are you there?
Yeah, hi Sandy. Hello everyone. First of all, I'd really like to thank my Quotient and Sandy for having me here. I really look forward to sharing all the insights from my personal financial planning journey. So just to tell you all about myself, I started off playing cricket when I was 11, and I played professionally for 12 years. I had a 12-year long professional career wherein I played for Maharashtra. I played under various age groups. I was also in the probables for the state one day Ranji Trophy team. And I was also a sponsored corporate player for Jain Irrigation Systems. But at the age of 23, then I had to contemplate where would I be if things go in this direction? Where would I be when I'm 30? Because cricket is a game of uncertainties. And unless you go on to represent India or play for IPL, it's not an easy life, or unless you come from a really strong financial background. So yeah, that's where I made the switch back to academics. I got into one of the better B schools of India, wherein I interned for Reliance Jio, and we did some amazing advertisement campaigns for the IPL and for MS Dhoni's company. Then I got finally placed in ITC. I was posted in Delhi. I worked for 2 years. I handled the entire personal care portfolio for the Delhi NCR region. And in March this year, I quit, and now I am working on my own startup. So that's about me.
Wonderful. Thank you so much for sharing that information with us. Our next speaker is Brinda. Are you there?
Yes. Hi, Sandy. Hi. Thank you for having me over for this talk. It's very interesting, and life is very funny that I'm talking about financial literacy, because my journey has been a very interesting journey, because I was completely financially illiterate. So I just think that, you know, this is like the universe sort of being kind and being like, okay, rewarding me for that. But so if I were to introduce myself, one word that definitely comes to mind is weird, or really eccentric, because as a kid, you know, when I was 5, I had this, you know, crazy idea about being on Forbes cover magazine and, you know, sort of making an impact. And I somehow believed that being a journalist would get me there. And so, you know, I started working towards that, you know, used to love talking, love leading crowds, you know, even in school, in college. And I think the idea of, you know, obviously because I'm an Indian kid after all, and, you know, we're all taught to be like, you know, top of everything, whatever we do, whether it's scores or, you know, colleges. So I did go to Lady Shri Ram, where you went as well, and you're my senior. I'm really happy about that. And post that, I somehow actually stumbled upon law. A friend was answering the entrance, and she wanted company, so I actually went with her to, you know, to for the entrance. And I somehow became a lawyer, and I always sort of doubted myself. But somewhere down the line, I started really enjoying law. So I actually even sort of topped the university and all of that, went to the best law firms. In India, I was working with, you know, a law firm and doing M&A transactions with them. And then I moved to Dubai. I was working with them, but somehow all of these, you know, like top score, best law firms just did not make me happy. I had that passion and that fire that, you know, this is not what I really want to do. You know, I can build something bigger. So 4 years ago, I actually started my own company in Dubai, and it's a commodities trading company. And currently I'm working in about 5 countries already. And it's been a very interesting journey. And I would, you know, through the span of this webinar, I would love to, you know, discuss my perspective on being an employee and being in that comfortable, you know, paycheck situation to creating revenue for myself every month. So I hope it's something which will help everyone. Thank you.
Wonderful, Brinda. Thank you very much for that. Hamant, can we have you on?
Hi, good evening, everyone. Thank you, Sandy. Thank you, Mice Koshin. Thank you for organizing this amazing panel discussion. My background spans sort of, you know, various domains in finance, and I've had the opportunity of working, you know, in the government of India. Prior to that, I worked at Goldman Sachs in London, where I was doing M&A transactions in the IBD team. I've sort of spent the past 9 years of my life really seeing capitalism on one side, wherein, you know, helping companies raise large quantums of money through various financial instruments, And on the other side, working in India for the government and helping just the underprivileged section of the society gain more access to financial inclusion and and secure different type of financial instruments. So it will be a privilege to bring different perspectives to this webinar, and hopefully it could benefit everyone's understanding. Thank you.
Thank you very much, Amant. And now we are with our final panelist, Captain.
Thank you, Miss Sandy, and my question for giving me this opportunity and platform to be able to come here and talk to you, everyone. When I was young, I wanted to touch the sky. And I used to pray to God, God, please give me wings. But then I soon realized that I have to be pilot to do that. So when I was in 7th standard, I wanted to be a pilot. And many people at that time to try to change my opinion, but I was just stuck on this profession since I had found my passion. Namaskar, my name is Arihant Jain and I'm a doctorate in aviation. I'm currently working as commercial pilot in a wonderful, amazing organization, Spice. And my dream is to fly lifelong, but unfortunately government allows only till 65 years. And admire, and I want to motivate admiring individuals. After completing my CPL from New Zealand, I came back to India and started working as a customer service executive in the same company since we had no jobs at that time. Then after that, I shifted to Ahmedabad and I'm married since last 3 years. Also, being a pilot, everything has a price, So being a pilot has its own pros and cons. So we'll be talking about that in this webinar today, this evening. Also, we'll be talking about my personal and professional life. So I request all guests to stay tuned. This will be interesting. Thank you.
Thank you very much. So we're going to go into the first part of our discussion now. And what I'm going to be focusing on is, I've heard a lot about how millennials are supposed to be doing things, taking shortcuts, finding easier way to do things. And they give the impression that perhaps procedure and practice and doing things in a certain manner is not something that they enjoy. And I want to know whether this is actually true, because you read a lot about, a lot of stuff is written about millennials from the point of view of marketing, or point of view of how we should make things more convenient for them, etc., etc. So I am now going to be focusing on something which we call discipline, practice, and various procedures. And I want to know from the millennials itself, are these really important? Do you think it's an important part of your life and your work? And to start us off on that, I'd like to first invite Captain to join us. And you're a pilot, right?
Yes.
Okay, and so from what I understand, you obviously carry a very large responsibility of hundreds of people on board of your aircraft. And when you are in that cockpit, what is it that you do? What is it that you have to do, whether you want to do it or not? And how many times do you have to really do this? Is it for every landing and takeoff, or is it just once? Or give us an idea about that.
Okay. See, as a pilot, passenger safety is supreme. So I will ask just a simple question to everybody here who's listening this webinar today, that what is the most beloved thing of yours? I suppose this is your life, and you can gamble anything. You can gamble money, you can gamble maybe relationships sometimes, but you will never gamble your life. So just imagine 200 people sitting behind you and with more 1,000 lives associated with them. So it comes with a high level of responsibility. And that's why we are considered to be captain of the flight. And the magnitude of responsibility is very, very high. And we follow some procedures and laid down SOPs, which helps us to make our work easier and safer. And we never ever, and we are not in a position to even skip those procedures. So I would say this is a huge responsibility that we carry on our shoulders. shoulders anytime, any day.
And so is this something that you have to do
Also,
every time?
yeah, each pilot knows the drill, but still each pilot repeats the drill every time before every takeoff and landing. And this is just because I will give you a simple example. आप लोगों के पास फोन होता है, आप जेब से फोन निकालते हैं और उसमें अपना पासवर्ड डालते हैं to unlock the screen. But unknowingly आप उसको कर देते हैं, then you realize you don't know the password, but your fingers have done the job. So this is something called body memory. And by repeating those drills and procedures and non-normal procedures, it inculcates and gets into a body memory. And in times of crisis, in times of any emergency situation, our body is, a human is expected not to perform at 100% efficiency. So this body memory comes into play and fills in the gap. That's why we repeat all the drills all the time. And it's a reminder to one that please be prepared for an emergency.
All right. So now my next question to you, Captain, is when you come home after a flight and you take off your jacket and your cap and you put your briefcase away, and then you are no longer captain, you're just Arihant, right? So how much of the captain, how much of the captain do you leave behind, and how much do you continue to be the captain when you're in your own home?
A person cannot shine at the two places same time. Just like the moon shines during the night and the sun shines during the day. Similarly, I am captain outside my house. But once I enter the house, my wife is the shining star, and she takes place and she decides all the 90% of my personal and practical life. And rest, I'm there to assist, and she takes care of me very nicely.
Okay, so you would say you just sort of relax and chill and become the normal person instead of the captain, right?
Definitely. At home, my wife is my captain. I have to listen to her then.
All right, good. So now my question to you is this: since you talk about body memory and you talk about doing things over and over again in case you forget it, so how much of that do you translate into your private life?
See, we definitely plan our life ahead. And however, our life can only be planned according to the given roster, which is sometimes of 15 or 20 days ahead. However, my wife is always there to fulfill the social responsibilities if I'm not there, and fill in the gap and just be there in place I am not there. That's why. And we usually plan everything. And at the most, if we cannot fly, we face it. And we face it with full heart, and we try to overcome any deficiencies then.
Wonderful. Thank you so much for sharing that information with us. We're now going to move to our next panelist, that's Devrat. And Devrat, you did mention when you introduced yourself that cricket was your first love. And I'm assuming it's still your passion.
Yeah.
Right? Okay, so I would like to focus a little bit about cricketing, right? Because I believe you were the captain of the team, and you led your team to many victories over the 10 years that you were involved with the game. But tell me, once you win and you know the drill, why is it important that you still have to practice, still have to go down there and put in those hours? What's the point?
I think there's pure science behind that, Sandy. As Captain said, you know what? When the ball is coming at 90 miles an hour, you don't have the time to decide. Your brain just pulls out something from your past, which is called as muscle memory, and it just acts. So what we do during practice is we are building our muscle memory. So if you have to be good at something, you have to practice at least 600 hours every year. So that's what we do. So your brain knows what to do, but for your head to be in the right position, your hands to have that bat speed and everything, that's what you practice for.
All right. And so how do you do this with the rest of the team? What do you do for them?
Okay. So I think one of the best part about playing sports, and especially a team game, is, it develops your people skills. there are so many different types of characters in the team, you know, and as a captain, you have to really identify that who are your like horses for courses kind of thing. So what I do is I go with a very simple concept. It's a 2x2 matrix of motivation and skill. So in the first quadrant, there is a player who is high on motivation, high on skill. In the second quadrant, there is a player who is high on skill but lacks motivation. In the third quadrant is high on motivation but lacks skill. So that is how you treat those players. If a player's got tremendous skill set and he's highly motivated, you don't do anything. You just be an enabler. If a player has got a high skill set but he's demotivated, you try to find out the reason, what is bothering him. You just bring him into a happy mental state. If there is a player who's highly motivated but lacks skill set, you devise a training program with the help of your coach and you make him work on that thing. So that is how I approach that.
Okay, so you are involved in this, and you're still very much, I'm sure, thinking about all those lovely days that you spent in your cricketing days. And now tell me, all this practice, all this discipline, all these strategies, all these quadrants, etc., how are you translating that into your business?
Okay. So right now I'm in process of building a business, but I'll just give you an example. So my first day at my job, I was posted in Delhi and I was handling a team of 10 guys. And these guys were working in the organization for 10 years already. And they were 20 to 25 years older than me in age. So for me, it was slightly, I was pretty overwhelmed by that situation. So I just went back to my roots, my leadership skills, and I just saw that you just can't go there and stamp your authority. You have to, first of all, make them secure about themselves. You have to acknowledge what they bring to the table with their experience and their skill set. And after that, the most important thing is you have to be on top of your game, because unless and until they know that you are good and you deserve where you are, you deserve to be where you are, that's when they start respecting you, not just because you've got a fancy degree from a good college. And once that happens, I mean, the team just starts working. So yeah, that helped me.
All right, so because I'm going to be coming back to you about strategy and discipline and all those things in the second part, but thank you very much for sharing that with us. We now move to Brinda.
Yeah.
All right, so Brinda, you are a lawyer and an entrepreneur. And one of the things before we move on a little further is I wanted to ask you, as a lawyer, do you feel there should be shortcuts, or when you're talking about law, agreements, negotiations, signing papers and all, how important is it to follow procedure?
I think in terms of procedure, law in itself is, it's all about the procedure and following, the essential steps. Even if you look at the way a law is made in any country, there are procedural laws, and then there is, there is the civil law or the law of, that has to be followed in terms of, the statutory law. So there is that divide. So definitely the process is really important. But in terms of shortcuts, again, this is something which falls in a gray area, because it really depends on what is the shortcut bringing to the table. Coming from a M&A background where transactions take, an average time span of a transaction, if done in humanly hours, would be, almost a month. But because, especially Indian law firms or any corporate law firms, we are, because we are bidding for a better, so that the clients come to us, we bid for low number of hours. So because of that, we're all working graveyard shifts. So situations like those really help in terms of going for a shortcut, like a robo advisor, or, doing due diligence based on easier tools. But then again, it comes with a risk of, being replaced by these shortcuts or these machine run tools, So that's there. But all in all, I would say that it has to be a balance, because obviously if we're going in for shortcuts, there could be a very important situation that could arise in the future, especially, something where most people, they don't necessarily like to read, long documents. So they just, something as basic as data privacy as well, we just go and we accept, and we do not care to read all of that. So that in itself is a shortcut which we all take every day. Even me as a lawyer, I wouldn't necessarily go and read everything, right? So I think a balance between the two is something which would be an approach to take.
So you're saying the word balance, right?
Yes.
Okay, so that's something I'll come back and talk to you about later. Uh, you are a business owner, right?
Right.
So as a business owner, how different is it to, for example, a person who is employed? What are the risks that you face?
I mean, this is something which is the major thing, because I think as an employee, of course, one of the risks that an employee would face is probably losing a job, because that's a source of revenue that they're making every month. But that's a guaranteed source, right? But for a business owner, there are so many risks that are involved at every stage, because, starting from idea generation, what if my idea is not good enough? What if my strategy is not good? What if the people I'm employing are not good? What if I'm putting my savings, it's not good, because the investment that I'm making, I'm putting my savings there. If my business idea fails, I'm losing out on my savings, execution. So there are multiple stages for a business owner where, risks are involved. And I think because it is sort of creating tasks for yourself on a daily basis, as opposed to, an employee having those KPIs and, just knowing what the, basically, an employee comes with a GPS, and as a business owner, you're left like in a deserted island, and you're supposed to sort of map it out and just, even build houses and like basic supplies for yourself. So I think it's all like, it's jumping without a parachute.
Okay, fine. And now we come to Saloni, the high pressure job that you do, and how do you manage?
So I would like to answer this question by quoting a quote in a different way. So it is said that behind every successful man, there is a woman. However, in my case, I would like to say that I have not one man, but three men behind my success who support me all the time. So first is, of course, my father, who's a guide, a friend, a father, protector, who has always given us a cushioned environment. So he is everything to me. Second is my husband, Mr. Abhishek Mohta. So all of them are listening to this, so I'm naming them. Mr. Abhishek Mohta. He's been one of my, strongest support pillar. And as a spouse, he is fantastic. And the third is my organization and my boss, Mr. Edwin Paul. I would like to take his name too, because he's the one who gives us a free platform to experiment and do whatever we want, who's open to ideas, who's open to experimenting new things. So I would like to say that I am able to juggle between all my work and high pressure deadlines because of the support of all three. And of course, some measures that I take with them.
All right, that's wonderful, Darlene. Thank you for bringing out that part about the support that you have from the male members of your family,
Yes.
because I think that's another thing that we will touch on later. And now we come to our final panelist, Hamant. So he's our banker and investment guy. So let us know what you do and what does it involve?
Sure. I particularly help companies access capital in different forms, whether that is equity or debt. And that requires a lot of technical analysis when it comes to valuation, understanding the market as in the market in which they're operating, and the customer segments, and understand the policies that are impacting the businesses. How can the companies adjust themselves? How can the companies capitalize on new age policies? Most recently, you've seen India has sort of leapfrogged in the financial technology sector. So I was associated with this company, Jumo. It's a South African company which I brought into India. I helped it set up operations and scale it here, which is in effect providing short-term loans to underserved segments and who have traditionally not been served by the traditional banks. So I think the opportunity of seeing business from policy side, from capital, and really leapfrogging for future is something that I find myself in the middle of. And that is my pursuit for future as well.
All right. So when this knowledge that you've gained over a period of time, I just wanted to ask you from a consumer angle, when we are talking about spending money, we're talking about saving money, we're talking about investments, etc. There's this thing that I keep reading about is called EMI. And on the other hand, I hear about SIPs, SIP. So can you just tell us a little bit about what is an EMI and when should it be used or when should it be discouraged?
Sure. I mean, I think, Sandy, you really bring a very interesting point here because there are two different instruments which function in similar way, but have a totally opposite effect. So one, using EMI, you're actually, using your savings to make expenses, and as SIP, systematic investment plan, you're actually saving to generate wealth over time. So one is an income item and the other is an expense item, right? The way I think a consumer should understand is that are they in a position to save right now, or are they in a position to expense? This question is what does the future entail for you? And I think the most important thing is which sort of serves as a bedrock to both the things is inflation, and your money invested today, is it the same amount that you will reap after a period of time, right? So in effect, is dollar worth a dollar 6 months from now? So EMI is what basically says is that you're not saving, you're spending money, you're buying products over a period of months, equated monthly installments, whatever that product you structure. So you can buy, let's say, a smartphone and you can pay 3 installments. In effect, the smartphone is for $100 and you end up spending $150 because of the interest that is associated with an EMI. Whereas an SIP is you put in $100 today, and after 6 months you are reaping $150. So we should think about both those items as an expense and as an income for future.
All right, that's great. Wonderful for bringing that to our attention. I think most of us do have a general idea that we are spending versus saving, but we don't really think about it in the terms that you've just explained, because there's a lot of incentives out there for us to use the EMI. And I'm not talking just about an apartment or an asset that we would consider, but nowadays what I've seen is that you can buy a phone on EMI, you can buy a laptop on EMI, you can buy the smart TV on EMI. So I think it's been translated and sent into the consumer space everywhere. And a lot of us don't really pay attention to how this is actually affecting our financial bank balance. So thank you very much for bringing that to our attention. And the other thing I wanted to know is, usually from the financial markets, etc., you always have new products coming up, especially from the banks, and they sort of push this towards their account holders and they do a lot of advertising, etc. So these products, besides the general banking, which is your savings accounts and fixed deposits, what are these products? Are they actually worthwhile? And what is it that as a consumer I need to know, or you all need to know, when we are wanting to commit some money to this? What do we need to ask?
Look, Sandy, that's a very complex question, because professions are based on financial advisory, because these products are so complicated in nature that you have to really go into the details and understand what they entail. But I think the key point to my mind is that what is the rate of return for a financial product, and try to not see it in isolation, see it relative to a market index or a comparable financial instrument with which you can actually gauge whether that return is worthwhile. Just for example, if I'm putting my money into a bank fixed deposit, that could be an 8%. And if my stock market is returning a 15%, question is based on your risk appetite. Do you want to invest in the stock market because that's an equity instrument where the loss can be high and it's variable, or you want to put your money into a safer asset that's a fixed deposit and get that 8% return. So I think you want to know your risk appetite. I think first that's a question you want to ask yourself. Where do you stand in terms of that? And secondly, you want to compare the returns, with some relative benchmark. And of course, I think the most pivotal point is understanding the credibility of the institution that is offering, because you would find some fly-by-night operators coming in offering high returns, creating that lucrative investment opportunities. And that's where I think the financial literacy comes into real importance, to be able to examine the products in great thoroughness.
All right, wonderful. Thank you so much for that. I think we're coming into our first break. So what I have learned from all of you today is that families are important, support is important. When you're doing things on your own, you're pretty much taking quite a bit of a risk. For those people of us who are looking at being in a work environment where you get paid a salary, again, you are assured of an income at the end of the month. But again, things can always change, as we've seen them change right now. And also we are looking at how should we be moving forward? Because the next part of our panel discussion is going to focus more about what do we do with our money? How do we value ourselves, and what do we find that we should be taking more care of when it comes to our financial future? So see you all on the other side of the break.
It's important to understand what you want. It's not what other people want. And when I encourage people, I tell them to look inside themselves, because that's where all the answers are.
So I hope you enjoyed that short break, because I really needed it. Because I need to marshal my thoughts. I've got so much information from everyone, and it's wonderful that we are now moving into something a little more, what should I call, meaty. Yeah, because at the end of the day, all of us are looking how to make money, how to make that money grow for us, and how to be financially secure. And that's what financial literacy is all about, because when we understand more, when we know what questions to ask, when we are aware of what is going around us, we will then be in a better position to make a decision on what we should be doing with our money. So a lot of us have a general idea, but that is absolutely not enough. So as Hemant was mentioning, he talked about the SIP and the EMI and the various banking products that are on the market right now and will continue to remain and grow and whatever else. But My thing is very simple. Not all of us are financial people. Not all of us are interested in being involved, for example, following stock markets or looking at new products, etc. And we then become the target of, and I'm saying target very specifically because I'm in sales and I do financial planning and I do insurance and I do all that. So I'm always looking for people that will buy products from me. But I've also realized that unless we are ethical in our service, we are not going to be able to retain our clients. And more important, we will not have a good reputation. But the onus is always on the person who is making the commitment. And for that purpose, financial literacy becomes far more important because it's only when you know what questions to ask and you know how you are budgeting, you're knowing how your cash flow is, etc., etc., will you be able to make an informed decision. So we're coming back to Hemant again, and I would like to find out a little more about him, about what are the kind of investments that a beginner should be looking at when they're looking to grow their money, besides a bank account, savings account, and fixed deposit.
So Sandy, I think you mentioned a beginner, so I presume that you're referring to somebody who's in the age group of 20 to 30, and I think at that time one should really really lay emphasis on creating a mix of assets. Basically in finance we call it portfolio allocation. So what is the composition of the assets that you're holding on your in your investment portfolio, and that could be a mix of equity, debt, metals, and precious metals. So I'm just going to take three because you can go into REITs, you can go into insurance, and there are many more. So in terms of risk, I think equity is sort of on the higher end of the spectrum. Therefore, the return is also higher. Debt, on the other side, is more safer investment, and you also have sometimes get interest benefits out of making debt investments. And then of course you have precious metals or including currencies, which again I think you need to be very astute to be able to follow those asset class in much more detail. So as personally, I always encourage sort of beginners to have a mix of equity and debt, and in that do an 80-20. Given the age group that you are, perhaps if somebody is in the age group of 50-60, then I would actually reverse the portfolio allocation and suggest 80-20, just because of the risk appetite, and you want to have a safer, secured way into your retirement and pension. So that is basically where I will suggest having an 80-20% in equity contributions. And to understand the equity, you can actually put money into mutual funds, systematic investment plans, or you could if you know of some stocks yourself, I think you can identify that. But I would urge everybody to be very careful and not go by the momentum of the market, or not go by the so-called tips that they receive from friends and family.
Thank you very much for that, Hemant. Devrat, I just wanted to touch base with you because we've been in correspondence before, and you mentioned that you are quite fond of following stock markets, and you also have a very high knowledge about insurance. So I would like you to tell me a little more about the various insurances that you know about. So that could be life, it could be property, it could be medical, it could be critical illness. So could you give us an idea of the kind of insurances that you are aware of, and that as a consumer, what are you looking at?
Okay. This is a really important question in Indian context, because people in India, the penetration of insurance in India is just about 3% of the entire population. People just don't understand the importance of insurances. They think that paying for insurance is just waste of money. And if I just put in this substantial amount into savings or a better return generating instrument, it's better. That's what they think. But then say if you work for 15 years, you put in all your savings into say FD or mutual funds or something, and if God forbid something happens to you, then yes, you will have that capital of 20 years with you. But what about the another 35 years of capital, the potential capital that you will be earning? So for that, you need life cover, which is called as the term plan. So how do you arrive at that particular amount? That someone would ask me whether should I buy a life cover of 50 lakhs or 1 crore or 1.5 crores. So you have to make a rough estimate of your family's annual expenditure. That is the one thing. You have to multiply that by the number of years that you want to buy that insurance for, say 20 years, 25 years, 30 years. So that when you are 50, when you are 60, when the probability of something happening to your health is very high. So you have to take that into account. Number two is you have to add your debts, whether you have a vehicle loan, you have a home loan. Number three is some one-time big expenditures like your kids' marriages or paying for their education. So when you add all these three, A plus B plus C, that's when you arrive at the amount of term plan that you need to have for your life. The second most important thing is the health cover, which is the Mediclaim. When you get hospitalized for particular illness or for accident or any health cover takes care of all those expenses. Because say a critical illness can wipe off your savings within say 15, 20 days. That is really important. Number third is the accident or disability cover. So your life cover takes care of your family in case of your death. But what if you meet an accident and you lose your earning ability? That's when the accident and the disability cover, it takes care of your family's finances in that situation. And number fourth would be, as I said, the most important thing, your house, it needs to be insured. God forbid, I mean, fire, earthquake, anything can happen, and you need to safeguard the most important asset that you own. And number fifth is your vehicle insurances. That's about it.
All right, wonderful, Dave. Thank you very much for that. Now, I just wanted to find out, do you have an personal interest in insurance, or is it because you grew up in an atmosphere in your home where insurance was considered an important thing?
Exactly. Insurance has always been my father's priority. I had no idea about all these insurances if you had asked me 3 years back. So recently I've become aware about it, and I know the importance of this, and I have made sure that I have safeguarded my family's and my own personal future.
So you think it is a good idea to take a life insurance, for example, at your age?
It
Or
is
should
very
you
much
wait till you
important.
have a family?
No, absolutely not. The most important thing is that you need to start early, because at my age, when you are 20, 25, 28, the premiums are very low as compared to a person who's into his 40s or 50s. As your age increases, the probability of something happening to you also increases. That is why the premiums also go up. So it's really important to start early. One, because the premiums are low. Two, is because when you stay invested with a particular company for a long duration, after a certain period of time, what they do is they give you that loyalty rewards in the form of increment every year. So your insurance cover goes up by 5%, 6% every year after you've stayed invested with them for say 5 years, 6 years. It's really important to start early.
Okay, so the last question I wanted to ask you on insurance is that you seem to know a lot, but did you get this education also from the person from whom you took the insurance, or did you pretty much tell them, this is what I want?
No. It's a thumb rule. You never take advice from the person who's selling you the insurance.
Okay, so what you're saying is, as the consumer, we need to educate ourselves on important aspects like, for example, insurance and savings and whatever else, so that we know what questions to ask, we know where the pitfalls are, and we know, to use a funny phrase, when to cash them out. Is that what you're saying?
Exactly. Yeah. And I think Hamant
Continue.
also made a very important point about, I think he spoke about time value of money. So when buying these insurances, they give you this option that you want to, pay out the entire term within first 5 years, or you want to pay for the next 30 years. So a lot of people think that, okay, I just want to get done with this in first 5 years, but then they don't take into account the time value of money. So they would actually be paying more if they want to get rid of the premiums for the next 25 years in the first 5 years. So it's always better to go for the annuity option while paying for the insurances.
Yes, I think I need to have you as my advisor now. All right. The last part that I wanted to ask you is, you seem to have an interest in the stock markets and you do follow what's happening around the world. So are you dabbling in stocks and investments by yourself?
Yes, I am. So part of my portfolio is into debts, part of it into mutual funds, and part of it I've kept. And I'm still learning very much when it comes to dealing in direct equities. I am still learning. So yeah, I prefer mutual funds.
All right. So you don't need to take advice from others, because I'm sure there are many providers that come and tell you you can buy mutual funds through us, and they provide you plans like education plans and retirement plans and stuff like that. So what do you think about those?
I think we are into 2020 and technology has enabled us to, just completely remove the middlemen from it. I mean, all my investments are directly through my smartphone. I mean, there is no middleman for that. You just get everything. There is all the knowledge out there on Google. Yes, of course, if there is a well-wisher around you, you can certainly ask for some help. But if you want to completely eliminate the middleman, you can do that. And I think you should do that.
All right, so I'm just going to quickly ask a question of Saloni, because her focus is something else. So would you agree with Dave when he says, you can do this all by yourself?
Yes, I completely agree with him. I wouldn't have agreed had it been some years back when I was not so financial literate, I would say. And earlier, my father, then my husband was looking after my financials. However, when I met you in Dubai and we had a discussion and you told how women should look after their finances themselves, it was kind of awakening call for me. And since then I started learning and doing more of it myself, and now I can say that yes, you can do it, definitely do it yourself. So you can of course take guidance from your spouse or your parents, but then you can also do it yourself. Like he said, you can completely eliminate the middle person and do it yourself.
Okay, that's wonderful and very good to hear that. So now I'm going to come to the esoteric financial instruments that are now available. And of course, the flavor of the day is cryptocurrencies. So out of the panel that we have, Hemant and Dave and Brinda, three of you, how are the three of you involved in cryptocurrencies? Brinda, you first.
Sure. So I think it's very interesting what everyone's been talking about. So I just want to add something to that and tell you something about currency then. So I think what Saloni shared about, women feeling intimidated or overwhelmed when it comes to, finances, and still being highly reliant on their male counterparts, because, the conventional idea of, all these things being very complex, numbers being complex, So for me as well, for the largest time, I think for the longest time, I was petrified of numbers, and to an extent where, I never used to even look at my statements, extremely irresponsible, but I was making good money. And I was like, I don't want to look at it because it makes me scared. Uh, but after a while, I actually realized the beauty of compounding, which I think Hemant and Devrat, they've both sort of pressed on. That, once you actually start investing early, the beauty of compounding could, give you so much back in return. And because I did not have the education, and like I started with this, that I was financially illiterate in a way, even though I was doing these transactions which were worth, really big numbers, but I think even people around me. So what I did was this, that I started, bothering all my investment banking friends, my Sindhi friends who know, like, their numbers really well. And I sat down with them and I sort of, really understood that where is it that one should invest money. And also because I think for me, because I'm still sort of learning, it's been a while that I've been investing. But for me, I think crypto is a very small percentage of my portfolio, because being a more conservative investor and a beginner in a way, I feel more comfortable going with, like a mutual fund kind of an option, or even robo advisors. Like in Dubai, there's this particular startup. It's actually no longer a startup, but I started investing with Sarva, which is, it's like a robo advisor. And it really helps you, because one thing that people don't realize when they're doing, and I think Devrat brought the point of middlemen and brokers. So the amount of money that you're paying for brokerage, uh, that again, it's a hidden cost, and one really assumes that it's barely a percentage of what they're paying. But in the long run, when you look at compounding, you're actually paying a fair amount of money as brokerage fee alone. So how to avoid those kind of things? Then, even learning lessons of patience, I think, like keeping your money in the market. Time in the market is something which is really important. So crypto, honestly, for me, I'm still nervous about it, because, it is something which different people have different ideas about it. So it's very gray for me. And so I do take a cautious approach, and I invest like a very small percentage of my portfolio into crypto. That's my take on crypto.
Wonderful. Thank you so much. And Hemant, you?
Short answer is that I have not been involved into cryptocurrencies, and I have not paid much attention to that asset class.
All right. So, staying with you, Hemant, what is the legal part? Because from what I hear, is that there are many companies, not companies, many countries that don't permit this, and there are lots of legal issues and banking regulation issues, etc., etc. So, can you just shed some light on that?
Yeah, so briefly on that, from an Indian law perspective, cryptocurrencies were banned, and Supreme Court now has actually, ruled against that initial ban, wherein they are, sort of created a new committee which is working on virtual currencies, and it is headed by the former Secretary of Department of Economic Affairs. So that's a change in the initial thinking. I think some of the this is going back to my time in the government. Some of the inhibitions, or some of the sort of the gray areas related to cryptocurrencies include money laundering. I think that's one of the biggest concern. And secondly is, of course, who is accountable for the value of the money. So if we carry a dollar, I mean, there is a central bank which is backing the value of the currency note, right? I think there's a huge sort of an institutional risk. Who is a supporter of if I go to, let's say, cash in 100 cryptocurrencies, right? Who will reimburse me that money, or is to serve as a store of value, as they say in finance. I think those are two major risks.
So, what I'm hearing is that people who are looking towards the cryptocurrency avenue as perhaps getting some exciting money, because I believe the values go up and down like crazy, and they could think of making quick money. They could also be stuck by not being able to liquidate. Is that correct?
Definitely, I think one is the volatility risk, as you mentioned, the crests and troughs in the performance of the asset class, and the second is the liquidity risk, and that's a huge, you would have to apply a huge discount to that value.
All right, fine, that's wonderful. So is Dave on screen? Because I can't see him. Dave, are you there?
Yes, I'm there. Can you hear me?
Yes, I can hear you. Okay, so there's a question here which it says, can you please explain how duration is to be taken for term insurance? Since you've taken term, maybe you can answer that.
So I think the maximum duration for a term insurance is 30 years. And the maximum age till which you can have a term insurance is 65 years. So I think you should go for maximum. Say if I'm 25 right now, and if I go for 30 years of term insurance, by the age of 55, I think the probability would again go high. So I need to have it till the maximum possible time. So yeah, till the age of 65, you need to have life cover, which is the term plan. And the maximum duration for which you can have is 30 years.
So for example, if a person is looking for life cover, term cover, they can then go on perhaps on the net and find out what are the maximum age, minimum age, maximum age, and I think that kind of information is available from all the companies. Am I right?
Sure, sure. Minimum age is 18, maximum is 65. That's a standard thing across all the.
Okay, and Dave, what's your take on cryptocurrency?
Crypto, I have been trying to read about it, but I still don't understand anything about it. It has had 350% falls, devaluation. So I'm really skeptic about investing into it. I really don't understand it at this moment, so I'll stay away from it.
And so because you don't understand it, you won't go when somebody else says to you, why don't you put some money into this? Would you
See,
do
there
that?
are, as Aman said, there are two major barriers. First is it has been banned in India, and second is the valuations are way too high. If you do the rupee into dollar conversion, it's very high risk and low reward instrument for me.
You'll keep away for
Yeah,
now.
for now.
All right, Captain, we're going to come to you, and I want you to give me your views on savings, allocating funds for specific purposes, and teamwork with your spouse.
Okay, I'll start with allocating of funds. Just like Devrat said, health insurance and life insurance are the two major portion of my. I just invest each year in this. But addition to that, I have to also take my license insurance because I have to keep my license. And if anything happens to my license, particularly for a pilot, it's like a fish out of water. So I also take license insurance for myself. And plus savings, I would say it plays a very important role in anybody's life. It gives you the sense of security, and considering the time we are going through, it helps you to fight the battle against the wrong times. And there's few suggestions from my side. If you want to save, like you can either save monthly or weekly, and you can just decide on a percentage or a fixed amount maybe. And you can cancel your re-subscriptions, and you can maybe all I want to say is stop worrying from tomorrow, just for the today.
Wonderful way of looking at life. That's
Yeah.
excellent. And
Yeah.
now talking
And
to
the
teamwork.
third portion you asked me, sorry, third portion regarding my spouse.
That was the teamwork with your wife.
Teamwork, as I've already specified, my wife fully supports me in that, and she's an amazing cook, by the way. And we have also started a cooking channel in the name of Captain Cook. So all people are listening here can subscribe it. So that will help us really nicely at this time because we just started it. And I've been investing in real estate also from the starting with the help of my father. And since I was teaching early days, when I was doing post graduation and graduation, I opened a small PPF account, which I'm still continuing with a better amount, of course. So that's how my teamwork with my wife goes.
Wonderful. You know, one thing, Captain, I wanted to touch on is the perk lifestyle. Because as a captain, you do have a lot of different perks. And during COVID, you suddenly realized that all these are not available. So can you first tell us about how fantastic the life of a captain is and what all he enjoys? And then coming to COVID, what happened?
See, it's definitely it's an exciting lifestyle. It comes with a complete package, and I believe that it's a well-paid job, and the company ensures that we get the necessary luxury to operate a flight. But since the time of COVID, since every people have stopped traveling from one place to another, it has taken by shock to the whole economy and aviation as well. But the company is, I mean, my budget is trying really well and trying to support all its employees very nicely. And talking about perks, apart from financial perks, we get such a if I talk about non-monetary perks, we get a bird eye view from the cockpit, and trust me, it is just mesmerizing. Also in terms of non-monetary, our family gets tickets to travel all around the world at just a minimal cost. And anytime we operate a flight, domestic or international, we get international and domestic allowances also. it's a complete package. It comes with both pros and cons.
So
It's
I would
wonderful,
say,
actually. I
I would
enjoy
say,
what I'm doing.
you know what I would say actually, Captain, is that you invested a lot in yourself in getting your training. And these are the perks and the returns that you're
Yes.
getting. So there's a message in that
Yes.
for all of
Yes.
us who are on the panel and all the wonderful people who have joined in on our webinar is when you invest in yourself, you will see very good returns. You just have to find out
Yes.
what is the best way to invest in yourself, right? So Saloni, I'm going to move to you now. And I believe you have a little boy
Yes.
and he's going to nursery. So we had talked little bit about education. So
Right.
you were right at the start of that. So how do you see the cost of education and how are you going to plan for that?
Okay, so first I would like to speak about cost of education. So when we were in school, our fees was around 20,000 annually on a higher side. And our school was one of the best school in Asia, seventh best school in Asia. Moving onwards today, the school in which my son goes, it's not a very top-notch school because they are very far and he's very small to travel. We don't want him to travel much. So he's going in a middle school and we spend around 1.5 lakhs annually on his education. And in that scenario, we think by the time he grows up and he starts his education, we will need around a crore for his education in whichever sector he wants to go. Like in aviation, if you want to become a pilot, your education takes around 1 crore. So similarly, by the time my son wants to go out and educate himself, and he will have, of course, different plans, different professional career, we need to plan and save today itself. So yes, we have taken that into account, and we are working hard towards it, both of us. And we have insurance, mutual funds, PPF. I would say that I find that the best, and SIPs to support all of it. We are thinking about that.
Wonderful. So you are really thinking forward, aren't you?
Yes, yes,
Oh, you just have no choice in the matter.
yes. You can say that too.
Yeah. So when it comes to, of course, education is a joint decision, and I'm sure your husband and you would both love to give the best possible education to your child. When it comes to other investments like, savings plans, buying a property, do you take those decisions by yourself? Do you have assets all your own, or do you have everything jointly?
So I would say that, a part of like my insurance policy or my medical insurance, the smaller ones, I take my decision independently. However, the if it comes to real estate, buying a property, or big decisions, then we take joint decisions. And of course, both of us are millennials. Both of us started our career together, so we do take guidance from our parents as well because they know better. So that's a joint decision when it comes to real estate and other big things.
Okay, so Captain and his wife take joint decisions. Saloni and her husband take joint decisions. Hamant, what about you?
Yeah, I recently got married, so we are coming to a consensus of taking joint decisions.
Okay, so do you think it's a good idea to have this a way of like yours, mine, and ours?
I do not think so. I think it has to be ours because you never know who's yours or mine gets bigger. So, if a consolidated fund makes sense because I think you can invest it more prudently. Otherwise, you split your money into three different streams, and then so the law of large numbers don't work. In short.
All right, so now I'm coming to the two single people. That's Devrat and Brinda. So Brinda, starting with you, since you still haven't made the choice of sharing your life forever with somebody else, what would your take be when you do make that decision, if you do?
Thank you. I think it's a very interesting question, and it's something which, anyone who's looking at going in for a partnership for life should definitely consider, because as a lawyer, I would say that is one of the major grounds for divorce in with so many couples, the whole alimony and all of that involved. I actually think that the approach that you spoke of with, mine and his and a consolidated fund is something which is, for me, a much smarter or a much better way of doing it. Because if we both chip in and we, create a pool together, which could be like our more recurring account, in terms of, whatever vacations we plan, or, even eating out. I think that's also a fair way of doing it, because, we all talk about an egalitarian society, but just the pressure that men in general have, whether it's, going out and they picking up the bill, and the whole chauvinistic thing, it's too complicated and it's unfair, I feel. So I think the simplest and the cleanest way of doing it would be both of us. And that way, as a family, we can take better decisions as well, whether we want to increase our budget of the common pool, if we're eating out more, or whoever's spending more, that kind of a thing. So which keeps both of us safe as well going forward, with our own finances. So yeah, that's my approach.
Wonderful. And Dave, what about you?
I second what Brinda said. I mean, I completely agree. She spoke my mind.
Okay, so you would be very happy that your future wife manages her own money.
Sure. If she needs any help, I'm there.
You won't feel that, I'm the man and I'm the boss.
We are in 2020. I don't need to feel like that.
I never know. I'm just asking, because you will be surprised that even in 2020, and quite a few of the millennials I have met still have that antiquated way of thinking. So I'm just going to share something about myself. I obviously am from the much older group, and I started working when I was just very young, 44. And most people looked at me like, what? You're planning to get a job at 44? Are you crazy? Are you thinking, what do you think you can do at 44? Well, to be very honest, all that time I had given financial responsibility to someone else. And that did not work. And so when we found ourselves in dire straits, I couldn't blame my spouse because he was doing his best. But circumstances were not in our favor. And I thought it was high time that I stepped up to the mark and did my bit. And what I learned from there, surprisingly, I got a job in financial planning. And I really needed it for myself. So I learned from experience. And what I decided then, right then, was to have my own money, have my own accounts, make my own financial decisions. If I had to incur any debt, it would be mine. In that way, I was not going to burden anybody else, and I was going to take responsibility for myself. So I think that's an important thing that we should all be looking at, is irrespective of who earns money, number one, it should be, you should share, number one. Number two, you should be involved in decisions that affect both or the whole family. And number three, always keep your own stuff, because you never know what can happen. And when I say that, it could be a divorce, it could be a death, it could be so many different things. And if you have your finances entangled with your spouse and you're not clear about it, you can end up in a lot of trouble. So Brinda, I just wanted to ask you, what is a good way from a legal standpoint that even young couples should be looking at when it comes to bank accounts, assets, investments, etc.? How should we safeguard those from a legal perspective?
Okay, I'm going to say something really controversial here. I'm not sure if, women would agree with me. I think men would agree with me more on this, but I am all about, I think the importance of prenup in, in marriages now is so important. The whole idea of prenup is not very appreciated, especially in, a more, Indian society where, the whole idea of marriage being forever, and, how could you already, have a roadmap for, once it does not sort of work out. But more than that, actually, I think in order to be safe, and this is not just for men, this is for women as well, there are so many relationships now or partnerships, I'm talking about life partnerships where, women, they're earning more, or their asset standing is more than a man's asset standing, right? So why is it just assumed that we all like sort of mix it up, and then, if things don't go right, then, everything's going to get equally divided? Because I don't think that is something which would be a very harmonious approach. And moreover, rather than looking at it as a negative, planning for the worst kind of a thing, I think it's equivalent to somebody being smart enough to put a will in place as well, because you're not sort of, death is inevitable, right? Similarly, like, these things, if you have a strategy in place, then you're basically preparing for a rainy day. So looking at that, I think that really helps, because then you have everything clear, there are no grays there. And I think money in general is something which really does dictate, relationships in a lot of ways. And most people, because it's an uncomfortable topic to talk about, um, they avoid this, but this causes problem in the end, like it's a shortcut approach of, oh, we'll manage it, we'll figure it out kind of a thing. But I think it's a very important topic and an uncomfortable topic to speak about and get it out of the way.
So I truly appreciate your wonderful view on that. And I think we should get over that, male, female kind of superiority and look at each other as equal partners who can make decisions that could affect the welfare of either of us. So I think it's an important thing to look at. What I would like to add here is to everybody on the panel and all those who are listening, please be very clear and very honest with your spouse when it comes to any debt that you have incurred. Because your spouse may not be aware of that. You may have taken a loan from a friend, you may have taken a loan from the bank, you may have a huge amount outstanding on your credit card. And she or he needs to know what the true situation is. That's number one. Number two, if you are getting into a relationship like marriage, each one is bringing their own financial baggage. And it's also very important at that stage for both parties to be clear and to be honest with each other in saying, okay, this is the amount of credit card debt I have, these are the EMIs I have, this is what I thought would be a good investment, but all the money has gone down. So unless you're very honest, you're not going to be able to have a healthy relationship. So that's something that everybody listening in should be aware of. And I know it's uncomfortable, but it's something that you should work on. So we're going to be finishing in the next 10-15 minutes. So I'm going to do a rapid fire round. And I wanted to know, Brinda, since you're on screen, what does inflation do to your buying power?
Of course, it affects everything because the prices are higher. The money that you're making, the value of that goes down. So, your purchasing power becomes lower.
All right. Liv, what about budgets? What do you think about budgets? Are they important?
Of course it is. I mean, you need to know how much is coming in and how much is going out and where is it going out. What proportion of your earnings are going into your insurance plans, what proportion of your earnings are going into your savings, your debts, and your all other standing expenditures. It's really important to have a control over each and every aspect of your finances. Budget is the most important thing, I think.
Wonderful. So nice to hear somebody agreeing with me on that. Great. And now I want to ask Saloni, needs versus wants. What is the thing that we should be looking at? I need this or I want this.
So, when I was in my 20s, I used to do a lot of shopping without considering if I need it or I want it. But ever since I've matured as an individual and, I'm more experienced and knowledgeable, I have everything that I buy now, I, think if I want it or if I need it. So a little example, like the other day, my son saw a MacBook Pro and he was very fascinated and he wants it. So then we communicate amongst ourselves and I speak, you don't need it, you want it. So we are not going by the wants, we are going by the needs, because wants are unlimited. So
all right, good. And now we come to Captain, what is your view on setting financial goals? Is it important?
Definitely, we need to set a goal, and in order to save money, we can have two types of goal, maybe short-term goals or long-term goals. For short-term, we can plan as if in vacations, family trips, and small EMIs related to gadgets, and anything, maybe a small emergency fund which can cater us for 3 to 6 months. And in long goals, we can plan for retirement plan, and probably long EMIs, house EMIs, and so yes, and if we fulfill our short-term goals, we really get motivated and we get in a habit to save, and then we can develop more goals.
Okay, so what you're saying, we need to allocate money for different things. And how does it feel
Yes.
after you've allocated all this money for the future that you have very little to spend in the present? Does that make you feel uncomfortable? Does it make you feel irritated? What the hell, I'm catering for everything, but what about me? What about me enjoying my life now?
So definitely, we have to make a goal considering the present situation. We have to be really logical and realistic in making goals. So whenever we are making goals, we need to see our savings also in that, and that will really help us in taking off that frustration you mentioned.
Okay, fine. So now, Hamant, are you there?
Yes.
Okay, fine. I just wanted to get your take on online shopping for everything from food to clothes, phones, vacations. Everything is online now. So what do you feel about that? Because it's so simple. Everybody has your credit card details. Everybody has your debit card details. And all you do is press the button. How does that work?
I think it just eliminates the resistance in purchasing, because when you're shopping around, then there's always a resistance in making a transaction, and then you probably go in with a grocery cart and you take out 10 things before you really get it cashed out. So I think to answer your question, online shopping is limitless, and it is a never-ending pit. I mean, of course, the pit is your bank account. If you drain out of it, then you will be out of the whole investing, the whole expenses. I think one should be very conscious about making purchases and not be governed by your impulses, but be governed about your requirements, which should factor in as part of the budget that you set out for your month or for your quarter, however you plan it. And then find the right comparison of prices and make the deal when it is there, as opposed to making sporadic impulse based investments or expenses. So I think it's really critical that you exercise prudence in making online purchases.
Wonderful. So what I'm hearing from everybody here is budgets are important. We have to restrict our online shopping. We have to weigh the pros and cons about needs and wants. And we also have to ensure that we keep inflation in mind, because I call it the silent thief. It's always present. It's there for us, but we never ever see it. And it's one of those lifelong companions. It's there from the day you're born till the day you die. So on that happy note of inflation and how we should take care of it in the sense of making our money grow further so that we can continue to enjoy the quality of life that we would all like to have. Everybody has their individual choice. It's an important thing for all of us to remember: discipline, focus, strategy. I think if we keep all those things, three things in mind, and more important, when we apply it to our own lives, it's not about today, it's not about tomorrow, it's about all the tomorrows that will become today. So for us, in order to enjoy what we really have and have peace of mind and be excited about the next day, I think a bit of prudence is in order, but that only comes when you are aware. Now, I have a fantastic panel here that is very much aware. Their level of financial literacy is pretty high, and that is the reason why they have been able to share these gems with you. So what I would like to suggest to you is, each of you who's listening, look at personal financial literacy and see how that can change your life. Because you know what? Knowledge is power. When you have knowledge, you can make better decisions. And remember this, and we all seem to forget it, you are the most valuable resource to yourself, not anybody else. You are the most valuable resource. And money is inextricably linked to you, to me, to everyone. Time is money, so make good use of it. Because if you don't, you're going to be in trouble. Play smart, make your money work for you. Never spend money before you've earned it. It's not money, it's what you do with it that makes a big difference. So as you can see, there's a slide up here, and I'm going to be running online financial literacy courses for young people, because I think this is the time when you make changes in the way you look at your money, you manage your money, earn your money, spend your money, invest your money. If you do it with a lot of knowledge, which you do it because you're making educated decisions, you will obviously be far more successful. So I will be sharing that information with you. And I have decided that it's going to be extremely reasonably priced. So if you look at the latte factor and the amount of money you spend every week on a coffee, on going to a bar, going out for food, and if you pay just a bit of that and put it towards your financial literacy, trust me, you will be able to enjoy your life much more. So on that happy note, I would like to thank all my panelists for being so wonderful, for sharing all that wonderful information with us, for being forthcoming, for sharing their personal views. And I would like to thank, most importantly, my Quotient for putting this entire event together, for supporting me in everything that I do, for believing in me. I would also like to thank, now who is that? I remember now. Sandeep Saxena. I'm taking him by name because he is the editor of the Dainik Bhaskar newspaper that has supported us, and the Chaupal, which they do, the Nagrik Foundation. All of them have helped us to get the message across, and I hope and I pray that all of you will come back. You have my address. If you ever want to get in touch with me, my Quotient is always there. Sandeep is always there. And all the panelists know me as well. So there's no excuse of not getting in touch. On that happy note, take care, look after yourselves, be strong, be happy, be rich. Thank you.
Thank you, Miss Sandy.
Thank
On behalf of my Quotient team and entire panelists and all our attendees who've been viewing you, thank you so much for putting this together. Miss Sandy is the producer and the brain behind this whole webinar, and she has really put everything together so well. So we would like to thank her. We would like to thank all our supporting partners, like she mentioned, Nagrik Foundation, SDG Chapal. We would like to thank our official media partner, Dainik Bhaskar. And I would like to take this opportunity. We are delighted to announce that we are doing a Indian Leadership, Women Leadership in Business Summit in September. We've been doing 5 editions of it in UAE for past 5 years, and they've been super successful, and we are launching it in India now. So thank you so much, Ms. Sandy. Thank you all the panelists, Haman, Devrit, Brinda, and Captain Aryan. It was lovely having all of you together.
Thank you so much for that, Saloni.
Thank you.
Thank you.
you.